to rehab, to redevelop, to resell, to preserve neighborhood property values and communities across our great country. So I urge my colleagues to support my amendment, and I preserve the balance of my time.
The woman reserves the balance of her time. Gentleman from California, does the gentleman rise in opposition to the amendment?
Yes, I do.
Gentleman is recognized for 5 minutes.
I give myself as much time as I might
Gentleman is
consume.
recognized.
Well, I know my good friend, Ms. Maloney, has the best of intentions in putting this amendment forward. But you're talking about the number of homes in each state that have been vacant 90 days or more and could be eligible to receive funding under the NSP. Well, the homes are not eligible to receive funding. Entities are eligible to receive funding. Then those entities, whether they be government or private sector, can go buy those homes. The problem is they can buy about any home they want to. The only restriction on the program is that you can only earn up to 120% of the median income in an area to be able to qualify to buy the house. But it does not restrict the price of the home being bought by the agency or the nonprofit. They can buy virtually any home they want to. And that's one of the flaws in the bill. For example, if you have to any home that's been vacated 90 days or more. Well, I have a partner of mine and myself. We had 4 homes for sale in the last year that were on the market more than 90 days. The houses were in perfect condition, but yet they remained on the market for over 90 days. So based on this encouragement, one of these groups, whether it be a city, a county, a private entity that's not affiliated with government, could have bought those houses and resold the houses for far less than they paid for them. That's the flaw with this program here. We're saying that what this wants us to do here is congressional findings to the bill listing all 50 states and the District of Columbia in separate subparagraphs and the number of homes in each state that have been vacant 90 days or more and could be eligible to receive funding in NSP. What you mean is any home vacant for over 90 days would have to be listed because there's not a dollar amount in the bill saying how much you can pay for a house. There's only a dollar amount saying how much a person can earn to buy the house. For example, if you live in Hawaii, you can make up to $73,825.20 a year and qualify to buy a home. In California, you can earn $68,416.80 a year and qualify to buy a home. It might be an $800,000 home, but you can still qualify with this. You just sell it to you cheap enough. You could, in Virginia, earn $74,382 and buy a home. In New Jersey, $78,367. In Massachusetts, $72,384. In Utah, $75,044. In Alaska, $76,786. In Colorado, $73,131. And in New Hampshire, $79,411. So the concept of this program is just helping people at the lower rungs who are really struggling. I'm not saying people aren't struggling in these income brackets. That's not what I mean. But I don't want the American people to have the perception that we're just trying to pick up deals and sell them to the lowest of income in this. Yes.
Numbers. Would the gentleman tell us what's the maximum number he thinks people should be eligible to get a house through the FHA or Fannie Mae and Freddie Mac?
I reclaim the balance of my time. I was in the building industry from my early 20s. And the most excitement you could ever see on a person's face was when they bought a home and they were moving into that home and they thought about raising their family. And I would love a country that every person in this country has the ability and the opportunity at some point in their life to buy a home. But in some fashion, lenders have put people in positions to put them in homes that they could not afford.
Would the gentleman yield?
In just a second, I will. And those homes, in many cases, the individuals lost those homes through foreclosures. And those people who were well-intentioned, who moved into homes that they could not afford because the lender perhaps did not describe it exactly, or they thought the way the economy is going, in 3 or 4 or 5 years the house is going to be worth 40% more than I paid and I'm going to make a lot of money. The problem is the market went the other way as it did in 74, 75, 81 through 83, 90 through to 96, and recently in 2007 to current, the market slid. And then we're saying we're going to go out and we're going to ask to do a survey and we're going to list any home throughout the United States in separate subparagraphs that have been vacant for 90 days or more that could be eligible. Well, all of them would be eligible.
Would the gentleman yield?
Yes.
But my recollection, I was struck by the gentleman talking about those figures, that they were too high, because the last I heard, the gentleman and I were together in trying to establish $729,000.
No, I reclaim my time.
$729,000 as the major amount you could spend.
I reclaim my time, Mr. Frank. What specifically has been said throughout this debate, as if we're trying to help people at the lower rungs, which I have no problem with. But I'm saying that there was not a restriction on the amount that could be paid for the house, and there was not a requirement on how much it should be sold for. And at that,
time has expired.
I yield back the balance of my time.
Gentleman's time has expired. Gentlewoman from New York. Gentlewoman from New York has 30 seconds remaining.
The gentleman, the problem is the other side of the aisle wants to abolish 4 programs that help people stay in their homes, helps affordable housing. They have no idea or no program to be helpful. They say there will be taxpayers' money, but if they supported the Democratic plan, it would have come out of an assessment on the banks. I understand the chairman will be introducing a bill, and I would like to co-sponsor that and would call on my colleagues to join. Absolutely.
Well, I just would say that the gentleman from California previously had agreed with some of us that you could be able to get a house with the FHA for up to $729,000. All of a sudden, he's only worried about the low income.
Gentlewoman's time has expired. Gentlewoman's time has expired.
And place in the record a statement from the administration in support and letters from mayors in support.
Without objection, gentlewoman's time has expired. All time for debate on the amendment has expired. The question is on the amendment by the gentlewoman from New York. Those in favor say aye. Those opposed, no. In the opinion of the chair, the noes have it. The amendment is not agreed to. The gentlewoman from
Madam Chair,
New York.
I call for a recorded vote.
Pursuant to Clause 6 of Rule 18, further proceedings on the amendment offered by the gentlewoman from New York will be postponed. It's now in order to consider en bloc amendments number 9 and 10 printed in Part B of House Report 1-1234. For what purposes, gentlewoman from Florida rise?
Good afternoon, Madam Chair. I have an en bloc amendment at the desk.
Clerk will designate the en bloc amendments.
Amendments en bloc numbered 9 and 10, printed in Part B of House Report number 112-34, offered by Ms. Castor of Florida.
Pursuant to House Resolution 170, the gentlewoman from Florida, Ms. Castor, and a member opposed. Each will control 5 minutes. The gentlewoman is recognized.
Thank you, Madam Chair, very much. Madam Chair, my amendments are very simple. They say that 90 days after enactment of this bill that we will commence a government accountability study to determine the impact of neighborhood stabilization rounds 1, 2, and 3 on communities all across the country. Now, I have to tell you, Madam Chair, I do not need a study to tell me that in my community, neighborhood stabilization has provided terrific benefits. Neighborhood stabilization in the Tampa Bay area in Florida, a community that was very hard hit by predatory lending, subprime, and the foreclosure crisis. Neighborhood stabilization has given us the tools to create vital housing in the midst of this horrendous crisis, and it has created jobs. I have to tell you, things have been tough in my neck of the woods, and neighborhood stabilization has given communities in our neighborhoods and our nonprofit agencies a little bit of hope. Property values in the Tampa Bay area have plummeted by over 40% since 2007. Neighborhood stabilization has helped us to stop the bleeding. Neighborhood stabilization has helped us protect our property values. And neighborhood stabilization has turned some of the worst abandoned and foreclosed homes that were causing blight all across our community into rehabilitated properties. And here are just a few examples of what neighborhood stabilization has done in Tampa and in Hillsborough County. First, with the help of our local nonprofit partners, in East Tampa, we have taken an abandoned, dilapidated residential property and we are turning it into housing for 18 homeless female veterans and their families. If you come down to my neck of the woods, unfortunately, you will see folks out on the street corner. We have a panhandling problem like never before, nothing I've ever seen in my lifetime in my hometown. And it's very difficult to deal with. A lot of the homeless are veterans, and some of them are female veterans. So we've taken that neighborhood stabilization money and plugged it into buying an old abandoned residential property, and we're now providing housing for those homeless veterans. We broke ground last fall, and let me tell you, All of the construction workers, the architects, the engineers, they were there to thank us because they also needed the work. Here's a second example. We also breathed life into a new downtown redevelopment mixed-use initiative. Years ago, the Tampa community tore down what was the worst public housing project anywhere around. It was named Central Park Village. Well, thanks to neighborhood stabilization, next week we are going to break ground on the first residential piece of this new community. The first residential piece will provide affordable apartments to seniors. Neighborhood stabilization did that. We did not have the funds, and our local partners did not have the funds to continue on that mixed-use public-private partnership. And it gets even better because that big mixed-use project is going to create 4,000 construction jobs in an area that really need them and 1,000 permanent jobs once the new redevelopment is finished. Third, throughout our community we have targeted those ugly, abandoned, dilapidated houses and duplexes on the street or that boarded-up apartment complex. We put people to work cleaning them up. We sold them or we rented them to a family who met eligibility standards. And you know, a renovated home can sometimes set off a chain reaction of home improvement throughout your neighborhood, and that is what we're seeing. The alternative would be letting houses stay vacant, continue to drag down property values in my community. Even further, we're putting families back into these homes. Our local nonprofit partners are returning them to the fabric of the neighborhoods rather than just having them sit there or seeing them flipped by out-of-town investors. In addition to the meaningful tools neighborhood stabilization gives to local communities like mine and the thousands of jobs it has helped create, I'd like you to take one step back and consider the modest investment neighborhood stabilization has provided. Overall, $7 billion over the past few years. I can't help but compare that to the $700 billion that was provided to Wall Street through the Wall Street bailout that I did not support because that was not directing the big banks to provide any help to our local communities. Well, neighborhood stabilization, this very modest investment, 1% of the Wall Street bailout funds now are providing greater stabilization throughout our communities. So I urge my colleagues to support my amendments and oppose H.R. 861.
Gentlewoman's time has expired. Does the gentleman from California rise to claim opposition?
Yes, I do.
Gentleman's recognized for 5 minutes.
Thank you. Some of the arguments that the gentlelady made are heart-wrenching. You hate to think about homeless people. Veterans are suffering in this country. There's no doubt about it. Veterans are coming back. Some of them have problems from being on the front, combat. In our church every week, our pastor talks about that, and we pray for these veterans, and you feel sorry for them. But we talk about elderly, we talk about veterans, we talk about children, we talk about homeless. Nothing in this bill prioritizes them in any fashion. There are groups that could be helped as a consequence of it, and that, I understand it, but nothing prioritizes. I'm going to accept the gentlelady's amendment because I have no problem with trying to determine the economic impact of the Neighborhood Stabilization Act. I think there's been a huge impact on the economy because we've given away to date $6 billion of taxpayers' money on this program, and I think we could have done a much better job at investing that money in another fashion that wouldn't have put the taxpayers at risk and perhaps created jobs in doing it. But I met with the NAHB, National Association of Home Builders, to talk about all the people in the industry out of work, and I talked to BIA. They're talking about all the Building Industry Association members out of work, and they're trying to put them to work. This bill has not helped them. We talk about a giveaway to banks. In TARP 1, we lent money to banks, yes, and they paid it back with interest. Freddie and Fannie, yes, we're lending money to Freddie and Fannie. They're paying 10% interest on the money. So to create this straw man out there of the bank giveaway and Wall Street and Freddie and Fannie is fallacious. Freddie and Fannie are paying, we're concluding, Freddie and Fannie, I didn't interrupt you, ma'am, are paying 10% interest. It's my time, ma'am. It is. They're paying 10% interest on the money. We did not just people who voted for the first half of TARP vote to give banks money and forget it, go home. It was to stop a major run on the banks and to stop this economy from plummeting, and Bernanke and Paulson, the administration, everybody, and both sides of the aisle agreed it had to be done, and the money was paid back, and we made money on it. Shock. This money was given away, and we will not be getting it back. I yield to Mr. Schriker for 90 seconds.
Madam Chairman, I'm pleased that we're actually accepting this amendment, because if we get an honest study from it, it could be some very interesting numbers. But I hope it's an honest study that also looks at, from top to bottom, has it something such as the Neighborhood Stabilization Act, in the previous $6 billion it's been spent, what crowding out has it done? What first-time home buyers, what investors found themselves competing with government? Be interesting to know. Also, if we keep hearing the numbers of saying, well, with their government money, we created this many jobs, how many jobs were being created if they were private investors or first-time home buyers or other families that were acquiring the same sort of properties and fixing them up? If we're going to get like for like, it'll be fascinating. Then we also have to deal with the reality of it. As we saw in the previous amendment, there was, in that amendment, it was claiming there's about 1,061,000, we'll call them vacant units in the country. Okay, if we start doing the math with the remaining $1 billion of additional money, how much impact does that have? And will the study also step up and say, with the $6 billion that's out there, that's supposed to be acting like a revolving fund, 5 years from the beginning of this program, which was what, last summer? How's that money being used? How much velocity is it really getting? Or is it now sitting in houses that are competing with other neighbors who are trying to sell theirs? Thank you, Madam Chairman. I yield back my time.
Gentleman from California.
I would be happy to yield to the gentlelady. I was not meaning to be rude or forget about you.
Well, I thank my colleagues very much for agreeing to accept my amendments. My point on comparing neighborhood stabilization to the Wall Street bailout was just to point out, and I know both sides of the aisle were involved in the Wall Street bailout. It was the Bush administration, but a number of Democrats worked to do that, and I'm not here to criticize that. It's just to compare the scale. $700 billion provided to the Wall Street Bank.
I reclaim the balance of my time.
To compare the 1%
I understand the lady.
to communities under neighborhood stabilization.
Mr. Speaker, I reclaim my time. I was going to allow for adequate time on that, but it was not a giveaway. It was a loan, and you're comparing $350 billion the first half that was lent to lenders to stabilize the economy versus $700 that's a giveaway. It's my time, Mr. Chairman.
Gentleman has 15 seconds.
The gentleman yield to me briefly.
Regular order, Mr. Speaker. I claim my time.
Gentleman from Massachusetts will allow the gentleman from California to continue.
I think we're comparing things that have nothing to do with the bill before us. We can talk about Wall Street. We can talk about banks. If anything, this has helped banks because it's taken foreclosed properties that they've had and it's bought them. So we can add all these straw men to the debate we want to. The thing is, should we give away taxpayer dollars? I say no, and I ask for an aye on the gentlelady's amendment.
Question is on the amendments en bloc offered by the gentlewoman from Florida. Those in favor say aye. Those opposed, no. In the opinion of the chair, the ayes have it. The en bloc amendments are agreed to. Pursuant to Clause 6 of Rule 18, proceedings will now resume on those amendments printed in Part B of House Report 11234, on which further proceedings were postponed in the following order. Amendment number 3 by Mr. Ellison of Minnesota. Amendment number 6 by Ms. Waters of California. Amendment number 7 by Ms. Waters of California. Amendment number 8 by Mrs. Maloney of New York. Chair will reduce to 5 minutes the time for any electronic vote after the first vote in this series. The unfinished business is the request for a recorded vote on Amendment number 3, printed in Part B of House Report 11234 by the gentleman from Minnesota, Mr. Ellison, on which further proceedings were postponed and on which the noes prevailed by voice vote. The clerk will redesignate the amendment.
Amendment number 3, printed in Part B of House Report number 112-34, offered by Mr. Ellison of Minnesota.
Recorded vote has been requested. Those in support of the request for a recorded vote will rise and be counted. Sufficient number having arisen, a recorded vote is ordered. Members will record their votes by electronic device. This will be a 15-minute vote.
For most of the afternoon, the House has been debating a bill that would end a federal program giving state and local governments money to buy and upgrade abandoned buildings. The Neighborhood Stabilization Program, it calls. The measure would block the spending of about $1 billion. It's the third of 4 bills that aim to end federal housing programs. And this is a 15-minute vote on one of 4 amendments that will get votes this afternoon. They debated 10 amendments to the bill. 4 will get votes. This first one by Keith Ellison of Minnesota would add congressional findings that states that need the Neighborhood Stabilization Program because the program has supported 93,000 jobs nationwide and assisted state and local governments. That's the Ellison amendment, one of his 2 offered to the bill, and this one will get a vote. 15 minutes on the House floor. 3 more amendment votes will follow. We get some more details on today's debate and bill and related housing bills from a Capitol Hill reporter. Stacy Caper is an economic staff writer with National Journal. White House Republicans want to end this program that's aimed at rehabilitating foreclosed homes.
This program, they believe, has just been a waste of taxpayer dollars. It fits in with the broader agenda of trying to cut government money that's been going towards programs dealing with housing and foreclosure issues. It's been one of a package of 4 bills that the House has been dealing with recently that are all aimed at sort of the same general idea of cutting back on the government's involvement in assisting with these housing relief programs. And
that fourth in that package of 4 is approved also in the rule today, that HAMP program, the mortgage modification program. Why aren't they taking up that bill today, and when are they going to take it up?
My understanding is that they will be coming back to that bill as soon as they get back from the recess when there's time on the floor that week. It's really the most controversial probably of these 4 bills that they have been working on. It's the administration's main modification program. It was intended originally to assist between 3 to 4 million borrowers. It's only reached a little over 600,000 with permanent loan modifications, so it has been ironically criticized from both the left and the right for different reasons. The Democrats have wanted to improve HAMP and other foreclosure prevention programs, and Republicans, this is another cost savings mechanism. They think it's been wasteful and hasn't had much bang for its buck, so to speak.
You mentioned the reason that Republicans are opposed to some of these programs, in particular on this bill. What are Democrats saying about the measures, about the programs, and why they say these programs work?
Well, for one thing, there's been a lot of back and forth. There's been a number of Democrats who've been very engaged in the foreclosure crisis and trying to work on mortgage modifications. Maxine Waters, in particular, has been particularly engaged. I mean, she has been very critical of the Treasury Department for not ramping up its efforts. But one of the difficulties with HAMP is that there are certain eligibility criteria, and with the unemployment rate being higher now than it was a few years ago, it's been difficult for borrowers to qualify. They still have to be able to pay a mortgage even if it's at a reduced rate. So there's just been a lot of back and forth. The Democrats that support these programs say, rather than abandoning them, we need to really try to strengthen and improve them and deal with the problems and their shortfalls rather than give up altogether.
How has the White House weighed in on this neighborhood stabilization bill and the HAMP bill?
The White House has issued veto warnings for all 4 of the housing bills, 2 that were already passed in the House, this one that's due to be voted on today, and the HAMP one when they return from recess. The administration has said that all of these efforts not only help individuals, in the case of HAMP, hang on to their homes, with the Neighborhood Stabilization Program, help to rebuild communities and prevent foreclosures from dragging down the home values of neighborhood properties. But the administration says that these also help the broader economic recovery, and that it would be a mistake to end these programs, and it's issued a veto threat.
And assuming that the bill, in particular today, passes the House, what are the prospects in the Senate?
So far, there doesn't seem to be much appetite in the Senate among Democrats to engage in this debate. Discussions with senators there have been that, look, we understand that there's problems. We are hopeful that the backdrop of this is that there's this huge global mortgage servicing settlement that several federal agencies and state attorneys generals are working on trying to get an agreement that would in part deal with the loan modification issue. They're hopeful for that to reach some sort of conclusion that could assist homeowners and perhaps find ways to enforce new servicing standards that would be helpful in the HAMP program with modifications. There has not seemed to be much appetite so far in the Senate among Democrats to have this debate.
Stacey Caper covers economics issues for National Journal, reporting on the debate on the home mortgage bills today here on the House floor. Thanks for the update. You can read her work at nationaljournal.com. Thanks for joining us.
Thank you.
And final vote on that bill ending the neighborhood stabilization program coming up. First, though, 4 amendments to be voted on, including this first one here by Keith Ellison of Minnesota, which would require a report on the need and efficacy of the neighborhood stabilization program in relation to jobs and properties affected. 15-minute votes, free 5-minute votes to follow. 3 more amendments after this one. Then we expect a motion to recommit and final passage still ahead, and live coverage here on C-SPAN. So this first one's a 15-minute vote. We're going to show you Elizabeth Warren. She was on Capitol Hill today testifying. She served as chairman of the Congressional Oversight Panel for the TARP program and testified today at a hearing looking at the Consumer Financial Protection Bureau, which she now temporarily heads. She was on Capitol Hill earlier today. We want to show you the opening statements of some of the members of the committee and Ms. Warren's opening statement as much as we can here during the remainder of this vote.
The committee is called to order. I would like to welcome everyone to what I believe will be one of the most important hearings the subcommittee will hold this Congress. We are joined this morning by Professor Elizabeth Warren, Special Advisor to the Secretary of the Treasury for the Consumer Financial Protection Bureau, who will be answering questions from members of the subcommittee on the creation of the Consumer Financial Protection Bureau, which we're going to call the CFPB because I can't get those 4 words out in great succession very quickly. So I would like to welcome her and thank her for her participation. She will be and has made a request because of her scheduling issues. She will be in the hearing until 12:30, so we want to respect that, and I think we will have a good and vibrant hearing and plenty of time to do that. The debate over the creation of the CFPB was intense, with many members having very different opinions on the best way to modernize the financial regulatory system for consumer protection. I think we can all agree that there were lapses in oversight and inherent problems within the regulatory structure. That said, many of my colleagues in the House of Representatives have serious concerns about the creation of a new bureaucracy with little congressional oversight. Many of us would have preferred to truly cut through the red tape and create a modern regulatory structure that demands better communication between federal regulators and provides consumers with the tools they need to report fraud in the system. What consumers need is a regulatory structure that allows for them to obtain information on a variety of financial products and then make an informed decision about which products best suit their financial needs. And from reading the professor's statements, she will be addressing those issues. One of my concerns with the creation of the CFPB with little accountability to Congress is that consumers could start to lose the ability to choose from a wide variety of products. It would be better for all parties if a portion of the Bureau's budget were a part of the annual appropriations process. Claiming that congressional oversight is present because Congress has the ability to overturn rules, I don't believe is the most effective way to conduct oversight. Additionally, I have questions about the role the staff of the Bureau are playing, the role of the staff of the Bureau is playing in ongoing rulemaking. It has come to light that representatives from the Bureau have been playing an active role in settlement discussions between large mortgage servicers, regular regulators, and state attorneys general. By statute, the Bureau will not be operational until July of this year. The involvement of Bureau employees in these discussions, I think, raises some questions. I have many more questions for Professor Warren and realize that time is limited. I would like to thank her again for joining us today and for her willingness to meet with so many members of the Congress. In her statement, she mentions that she's met with over 60 members, and certainly as one of those members, I appreciate that very much. I would like to now recognize the ranking minority member, the gentlelady from New York, Mrs. Maloney, for the purpose of an opening statement. And I'm going to scoot out very quickly, but I will be back.
But not before I thank you for calling this hearing and for your friendship and for your leadership on so many important issues, including this one. And thank you and welcome to Elizabeth Warren, who has been at the forefront of the effort to create a Consumer Bureau for years. Thank you for your service and for your commitment to all American families. You have been a true champion for the American consumer and for fair, and I am getting reports from all sectors, all stakeholders in our financial community that you have reached out to them and you have been fair and balanced in your approach. History has long shown us that our country is at its most secure and most prosperous when the middle class is economically vibrant and growing. Recent history has also shown us that the reverse is true. Though it's hard to come by an exact figure, in 2008, the worst year of the Great Recession, household wealth in America fell by more than $11 trillion. Let me repeat that stunning figure, $11 trillion. And the middle class, by any reasonable measure, has borne the brunt of the economic damage. Millions lost their jobs, lost their homes, lost the chance to go to college, lost the hope of a better and brighter future. That hard and inescapable fact was one of the most compelling reasons for the enactment of the Dodd-Frank bill and the creation of the Consumer Financial Protection Bureau. We took a huge step forward toward creating a more level playing field for the American consumer and the American middle class. For far too long in our financial system, regulatory concerns about consumer protection came in a distant second or a third or was not considered at all. But now, for the first time, anyone who opens a checking account or savings account, anyone who takes out a student loan or a mortgage, anyone who opens a credit card or takes out a payday loan will have someone looking out for them and a federal agency on their side to be fair and balanced and to protect them. For the first time, Consumer Protection Authority will be housed in one place, the CFPB, with an independent appointed director, an independent budget, and an autonomous rule-making authority. For the first time, a truly independent authority will be able to write new rules for non-bank financial firms, including payday lenders, debt collectors, mortgage brokers, and other financial institutions. And very importantly, for the first time, consumers will have a seat at the table at the Financial Stability Oversight Council, and the Council will have the authority to nullify any rule it believes will harm an institution's safety and soundness. This kind of even-handedness and common sense oversight of our financial system with strong consumer protections will ensure the safety and soundness of the system as a whole and is clearly in the best interest of the American consumer and the driving force of the American economy. Elizabeth Warren has been at the helm since September 2010 as the agency gets off the ground, so I will be very interested to hear how the process is going as well as what the agency's initial priorities are going to be when authority is officially transferred to the agency in July. I thank the Chair again for calling this hearing, and I welcome Mrs. Warren. Thank you.
Thank you very much. Welcome, Professor Warren. It's good to see you. I would just like to make a couple of observations here, and one is that a number of people in the regulatory community and a number of economists have raised concerns about some of the unintended consequences of the titles in Dodd-Frank, Title 1 through 9. There are provisions throughout the legislation that wasn't really thought through. But Title 10 seems to be particularly problematic, and I'll explain some of the concerns. Beginning July 21st, the Federal Reserve has to transfer to the Bureau whatever funds the Bureau's director has requested, despite the fact that neither the Fed nor Congress will have any say into the Bureau's budget. Now, that's unique, and that's one concern that's been raised. The second is, well, as a byproduct of that, when you think it through, it really raises two problems. First, this agency will be able to act outside of the normal appropriations process and the way Dodd-Frank set it up, which means that it will not be held accountable for the actions taken. And the other problem comes from putting safety and soundness protection behind consumer protection in our regulatory structure. This is something you and I have talked about, but we've tried this model with the GSEs, and it did not work. Both the acting and former heads of FHFA have said that that competing regulatory structure, OFEO versus HUD, contributed to the failure of Fannie and Freddie. And here, instead of abolishing that model, we have, with Dodd-Frank, replicated that regulatory model throughout the financial system. And that gives cause for all of us, I think, to ponder whether this was done correctly. And the final concern I have with Title X is the assault on preemption. Regardless of our political affiliation, I think we should all be able to agree that one uniform standard is much simpler, much more effective. We already have 97% of the lawsuits in the world today that occur here. Encouraging more litigation and more uncertainty in this, I just think Dodd-Frank takes a major step back. We now have every single state attorney general interpreting federal laws, and banks' subsidiaries will now have to comply with state consumer protection laws instead of one national uniform interpretation here. And I think this is going to be a boon for the trial lawyers, but it will do little to protect consumers or make our capital markets more competitive. So it's my hope this committee will take the next necessary steps to correct these failures in the Dodd-Frank legislation. And we now go to Mr. Scott of Georgia for his 5 minutes.
Thank you very much, Mr. Royce. I appreciate that, and welcome, Ms. Warren. Ms. Warren, I think that you have a sort of a delicate balance that you have to walk here. On the one hand, you have to make sure that the consumers have not only the proper information to educate them about some of the practices in our financial services industry, but you also have the requirement to make sure that what you do will not thwart access to capital for our consumers, for the banking community, particularly for small businesses, while at the same time give the confidence today that you will also protect the American consumer, protect access to capital to them, protect the consumer. I'd also like for you to address just what impact my good friend on the other side of the aisle, Representative Nachbauer, has a bill. And that bill basically seeks to defund and keep you in Treasury. I'd like for you to address just what this means to you. How will this either make your duties better or make your duties worse with this bill? And then finally, I'd like for you to address the concerns of the banking industry. The banking industry is scared to death of this. They feel this is a threat. While at the same time, the banking industry is the heart of our economic system. It pumps the money, which basically is sort of like the blood, the life source, throughout our system. And it might be good for you to address that, to ease some of the concerns within the banking committee, that you're not the threat of the evil empire that perhaps some of them might think. And so I think that this is a very timely hearing, and you do have a delicate balance, and I hope that you will address some of these concerns, and that we all will leave this hearing far more wiser and more confident in your ability and the operations of this new Bureau, that it is not a threat, but it is a much needed solution and approach in a very trying economic time. Thank you, and I yield back the balance of my time.
We're going to go to Chairman Baucus. Before we do that, I ask unanimous consent to allow Representative Al Green of Texas to participate in the hearing. And without objection, we go to Mr. Baucus. Chairman Baucus.
Thank you. Director Warren, you are probably directing the most powerful agency that's ever been created in Washington. It's not a commission, it's one single person, and it will regulate all providers of credit, savings, payment, and consumer financial products and services. Covered persons is defined as any person that engages in offering or providing a financial product or service. The definition of financial service, of financial product or service, you'll define, or whoever heads the agency will define what that is. It's not defined in the statute. And also, you will have the ability to identify and ban any financial product or services that is deemed unfair, deceptive, or abusive. But there's really no legal definition of abusive. So you'll have basically, or whoever heads this agency will have the right to make that determination. And your budget, you'll have as much as $500 million from the Federal Reserve available with and you can seek appropriations of...
This vote, the yeas are 175, the nays are...
and the SEC, which has $900 million. Now, I will start by saying that no one questions your commitment to consumer protection, and I want to acknowledge that. But you will basically make the decision as to when consumers are protected and when they're not, and what products will be offered and which products won't. You'll have quite a budget. You've not been nominated by the President. I don't know when that'll happen, or whether you will be nominated. We asked Secretary Geithner in September, and he said the nomination will be made soon. Well, you know, it's 6 months later, and I think you would like a nomination to be made. Certainly no one's been confirmed by the Senate. And yet you have a lot of discretion and a lot of...
On this vote, the yeas are 181, the nays are 244.
Mr. Dingell. Mr. Dingell votes aye. Mr. Hinchey. Mr. Hinchey votes aye.
On this vote, the yeas are 183, the nays are 244. The amendment is not adopted. The unfinished business is a request for a recorded vote on amendment number 6, printed in Part B of House Report 11234 by the gentlewoman from California, Ms. Walters, on which further proceedings were postponed and on which the noes prevailed by voice vote. Clerk will redesignate the amendment.
Amendment number 6, printed in Part B of House Report number 112-34, offered by Ms. Waters of California.
Recorded vote has been requested. Those in support of the request for a recorded vote will rise and be counted. A sufficient number having risen, a recorded vote is ordered. Members will record their votes by electronic device. This will be a 5-minute vote. The chair will call the vote at 5 minutes, and the chair suggests members stay on the floor for 2 further votes.
The underlying bill would end the neighborhood stabilization program that helps governments and nonprofit groups buy and redevelop foreclosed and abandoned houses. 5-minute vote on an amendment proposed by Maxine Waters of California that would require the housing secretary to notify neighborhood stabilization program grantees within 30 days of the termination of the program. It's a 5-minute vote on this amendment. We'll take you back to today's hearing in Financial Services with Elizabeth Warren.
Just a good faith reliance on your abilities, integrities, and judgments. And that is quite a burden for you and quite a burden for us. And I think adds to a great deal of uncertainty. So I look forward to hearing your testimony. But I will tell you that since last July when we passed Dodd-Frank, I've advocated for a commission all along. And I believe that having a board is a much better approach because I think it's asking one person to do too much. Thank you.
Thank you, Mr. Chairman. I'd like to recognize Mr. McHenry from North Carolina for 1 minute.
I thank the Chairman. And when the CFPB was debated, many of us were concerned that your agency would have a great deal of power with very little congressional oversight. After all, as the Chairman mentioned, the appropriation process is one point of congressional oversight, which you will not have. We were concerned that severe economic consequences would arise from the separation of consumer protection and safety and soundness duties. While that question was before us in theory, it is now in front of us in a very real way in the form of the recently released mortgage servicer settlement term sheet. Our economy is still very fragile, and a recovery in the housing market will play a big part in getting our nation back on its feet. A number of the provisions of the term sheet could cause a crippling slowdown in that recovery. I look forward to speaking with you about this and other matters, and I appreciate Chairman Capito you holding this hearing.
Thank you. I'd like to recognize Mr. Pierce from New Mexico for 1 minute.
Thank you, Madam Chair, and thank you, Ms. Warren, for being here today. We appreciate that. As everyone's saying here, that your new agency is going to wield a lot of power. The basic problem in the country is that we're spending $3.5 trillion a year, and our revenues are $2.2 trillion a year. Our economy is frozen in place. The recovery is stalled out by regulations which are causing uncertainty. The health care regulation, the whole health care bill is causing people to lay off employees to get below caps. It's freezing the creation of jobs in the medical field. We see the regulators freezing loans. Banks have money to lend, and they're afraid to lend it because they are now faced with $50,000 fines that used to simply be simple write-ups. So I'd be interested to see what you're doing to unfreeze the market to create certainty instead of the uncertainty that is coming out of the government right now. Without that, our economy is doomed to fail. It is doomed to fail if we continue on the path that we're on. I look forward to talking with you on this briefing. I yield back.
Recognize Mr. Luthmeyer from Missouri.
The yeas are 173, the nays are 247.
Mr. Olver. Mr. Olver votes aye.
Vote the yeas are 174, the nays are 248. The amendment is not adopted. The unfinished business is the request for a recorded vote on amendment number 7, printed in Part B of House Report 11234 by the gentlewoman from California, Ms. Walters, on which further proceedings were postponed and on which the noes prevailed by voice vote. Clerk will redesignate the amendment.
Amendment number 7, printed in Part B of House Report number 112-34, offered by Ms. Waters of California.
Recorded vote has been requested. Those in support of the request for a recorded vote will rise and be counted. A sufficient number having risen, a recorded vote is ordered. Members will record their votes by electronic device. It's a 5-minute vote.
Congresswoman Joanne Emerson yielding the gavel. 5-minute vote here on an amendment by Maxine Waters of California on this bill that would end a federal program giving state and local governments money to buy and upgrade abandoned buildings. 5-minute vote. We'll take you back to Financial Services Committee hearing from this morning while this vote continues.
Protection Bureau will be a self-regulated, unchecked body governed by one individual and funded outside the congressional appropriations process. This Bureau promises to promulgate rules to regulate every financial product available. All American financial firms, not just the ones who played a role in the financial crisis, will be subject to its regulatory authority in some way. And all this power is given with little or no mechanism for oversight. As a former bank regulator, I'm concerned that this agency puts consumer protection ahead of the safety and soundness of our financial institutions. In a time when we're just seeing signs of recovery, the last thing our lenders need now is for an intrusive one-size-fits-all government regulatory agency submitting more regulation to them. I thank our witness for attending. Look forward to the hearing. Thank you, Madam Chair. I yield back.
Thank you. I'd like to recognize Mr. Dold from Illinois for the purpose, for 1 minute, for the purpose of giving an opening statement.
Thank you, Madam Chairman. And I want to thank you, Professor Warren, for your time today. And I think all of us on the panel are certainly concerned about consumer protection. However, we can't let theoretical consumer protection become the vehicle for categorically eliminating consumer choices or for effectively prohibiting new, customized, or sophisticated financial products. Doing so, I believe, would not protect consumers or jobs. Ultimately, the question comes down to who makes the best decisions about financial products for consumers. Unelected or unaccountable bureaucrats in Washington or the consumers themselves. At both the state and federal levels, we already have countless relevant laws, regulation, and regulators, not to mention great incentives for class action lawyers to privately enforce these pre-existing legal standards. Do we really need to superimpose another multi-billion-dollar bureaucracy on top of pre-existing legal infrastructure? If so, shouldn't that new federal bureaucracy at least be accountable to the American people through their elected representatives? And shouldn't Congress give the new bureaucracy more guidance than relying on abstract concepts like whether a product is unfair, whether it's deceptive or risky? And shouldn't we also ensure that this new bureaucracy never jeopardizes bank safety and soundness in the name of consumer protection? Our economy is already struggling with uncertainty and dislocation. I hope that we will all carefully reflect. Our economy is already struggling with uncertainty and dislocation. I hope that we will all carefully reflect on whether any theoretical bureaucratic benefits justify the risk that this new bureaucracy itself poses to consumers, to jobs, and to our economic growth. Thank you. Yield back.
Thank you, and I would like to recognize Mr. Canseco from Texas for 1 minute for the purpose of giving an opening statement.
Thank you, Madam Chairman, and thank you, Mrs. Warren, for being here today. You know, on its face, the Consumer Financial Protection Bureau seems like a good idea, an agency whose mission is to protect the consumers. Unfortunately, like so much else within the Dodd-Frank bill, the unintended consequences of the CFPB continue to come to light. It turns out that consumer protection really means consumer restriction, consumer control. Having the federal government restrict the choices available to consumers in the name of protection sets a terrible precedent. Professor Warren has styled herself as an advocate for families, yet there is no greater advocate for families than a husband and a wife sitting down at a table, pen and paper in hand, planning their family's finances without government interference or oversight. There is no room for a third seat at that table, one occupied by a faceless bureaucrat who does not even know their names, much less what is in their best interest. American families deserve the dignity of being able to make their financial decisions by themselves. Decisions about credit cards and mortgages belong to the family at the family table, not a Washington bureaucracy. Thank you, and I look forward to your comments.
Thank you. That concludes our opening statement. So I...
Vote, the yeas are 178, the nays are 249. The amendment is not adopted. The unfinished business is the request for a recorded vote on amendment number 8, printed in Part B of House Report 11234 by the gentlewoman from New York, Mrs. Maloney, on which further proceedings were postponed and on which the noes prevailed by voice vote. Clerk will redesignate the amendment.
Amendment number 8, printed in Part B of House Report number 112-34, offered by Mrs. Maloney of New York.
Recorded vote has been requested. Those in support of the request for a recorded vote will rise and be counted. Sufficient number having risen, a recorded vote is ordered. Member will record their votes by electronic device. This is a 5-minute vote.
The underlying bill would rescind a third round of funding for the Neighborhood Stabilization Program and would terminate the program. David Hawkins in CQ writes that even if the bill is passed, it stands no chance of enactment before that next $1 billion round of grants goes out the door in 2 weeks. This is the last of 4 amendments to get a recorded vote. An amendment by Carolyn Maloney of New York, which would require a list of the number of homes vacant for 90 days that would be eligible for the Neighborhood Stabilization Program. 5-minute vote, and we will take you back to the hearing on TARP oversight from Financial Services this morning.
Thank you, Chairwoman Capito, Ranking Member Maloney, and members of the subcommittee for inviting me to testify about the work of the Consumer Financial Protection Bureau. This is the first oversight hearing for the new consumer agency, and I welcome it. I hope you'll permit me to begin with a personal note. I didn't come to Washington because I yearned to be a government official. I came to Washington because Congress asked me here. My first job started 2.5 years ago when I was appointed to the Congressional Oversight Panel, where I served as chair. At the Oversight Panel, we work to produce detailed reports for you about TARP every single month. During that time, I came to Capitol Hill on many occasions to testify about our oversight of TARP and to answer your questions. You schooled me early on the importance of oversight, and I believe in it. Since taking the job of putting together the new Bureau, I've had more than 60 one-on-one conversations with members of Congress. I've sought your good counsel on many issues. I have, for today's hearing, I've prepared 34 pages of detailed written testimony to document our startup efforts. The testimony describes our vision for the new Consumer Bureau and the progress we have made so far. I hope it is helpful in guiding your oversight efforts. The Consumer Bureau's mission is straightforward. Make prices clear, make risks clear so consumers can compare one product to 2 or 3 others. Fine print is great for those who want to hide something, but not good for families who want to know what they're getting into. Mortgages, credit cards, checking accounts, America's families have a right to see the deal right up front. There's another issue that I know many of you are concerned about, and I'd like to address it head-on. Reports of serious deficiencies at mortgage servicers. The Department of Justice, through the Financial Fraud Enforcement Task Force, has been coordinating with other federal agencies and 50 state attorneys general to review and address these deficiencies. Last month, this country's chief banking regulator came to Congress and said these deficiencies have resulted in violations of state and local foreclosure laws, and they have damaged mortgage markets and the U.S. economy at large. As you know, this new consumer agency is still getting started and doesn't yet have any enforcement authority. Therefore, we will not be a party to any formal settlement with mortgage servicers. However, later this year, the Bureau will receive authority to set standards for the mortgage servicing industry. For this reason, Secretary Geithner, the Justice Department, and other agencies have requested the Consumer Agency provide advice on these matters. We have provided our comments, and let me tell you why. If there had been a cop on the beat with the authority to hold mortgage servicers accountable a half-dozen years ago, if there had been a consumer agency in place, the problems in mortgage servicing would have been exposed early and fixed while they were still small, long before they became a national scandal. The mortgage servicing problem illustrates the importance of fair, consistent enforcement. We need a cop on the beat that American families can count on. It is critical that we get this right, a real cop on the beat. Right now, our government is trying to work out a settlement to end this scandal. This is a law enforcement matter. It includes a bipartisan or nonpartisan roster of law enforcement officials at federal agencies, at the Department of Justice, and 50 state attorneys general. While it would be inappropriate for me or for anyone else in government to disclose the substance of the discussions regarding
Both the yeas are 179, the nays are 246. The amendment is not adopted. Question is on the committee amendment and the nature of a substitute as amended. Those in favor, please say aye. Those opposed, no. The ayes have it. The amendment is adopted. Accordingly, under the rule, the committee rises.
Rita, when you get down there, you're going to switch places. Hey, Joe.
Thanks very much. What do I say to her?
Madam
Chairman.